Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and Borsog trading. If you're new, a very warm welcome and welcome back KS family, and please note I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. Bitcoin is currently up 2.25% to 17,209. Ethereum is up 3.71% to 1280. As professional technical analysts, one thing we do is first to mark up our charts with the CTKS method. This helps us identify long-term structural support and resistance levels, or smart money buy and sell levels. Then we look beyond the charts, checking world events, pop back into the crypto market after that, and enhance our pattern recognition. But we throw out fear and install courage before we buy or sell. In the last trading session, we saw the VIX come down and the major indices come up. Also, gold came up and Bitcoin came up and oil went down. Yesterday, unemployment claims came out and they were as expected. The big news will come out today. The core PPI month on month, the PPI month on month, and then later on, the preliminary UOM consumer sentiment and inflation expectations data. And then next week, there's an absolute raft of key economic data coming out. In about 6 days, the FOMC will meet, and there's currently a 79.4% probability of a 50 basis point increase in the federal funds rate. Stocks push higher ahead of key inflation numbers, and the FTC is seeking to block Microsoft's $69 billion Activision deal. The markets are currently cheering demand destruction, and the number of Americans filing for continuing claims for unemployment benefits rose by 62,000 to 1.671 million on the week ending November the 26th. And what you can see here is on the 8th of December, it's risen up to 1671. That's that bar there. So you can see unemployment claims are going up. And why are the markets rallying on this? Isn't that bad? Well, not according to the Fed. The Fed wants to destroy demand, and it wants to loosen the job market, which is very tight and overheated at the moment. How does it do that? It puts people out of work. In other news, Russian President Vladimir Putin said on Wednesday that nuclear tensions were rising, but they've not gone crazy, and Moscow would not deploy first. Many commentators are pointing to advanced coordination between EU and global nations to impose sanctions as a red line for Russia. That's why it's backed off its nuclear rhetoric. We know from Rule 225 that Bitcoin cannot escape the stock market's gravity. What did the stock market do? It went up. What did Bitcoin do? Bitcoin, this blue line, went up as well. The chart we're looking at is the S&P 500. And we can see that the S&P 500, currently trading at 39.63, came down to a smart money buy level at 39.22 and then made its way up, turning all of these levels into support. We've seen a bit of a reactive bounce. We've got a slight crossing of the trend, but there's a lot of negative momentum, and we're still under another level of resistance. When we start to get above 4,004, the SPX, the S&P 500 index, is looking good. Without the CTKS method, we would not know where smart money is buying or selling. We'd be left with a chart that looked like this, and we'd have to guess where the buy and sell levels were. But when we apply the CTKS method to it, and we analyze all of price data, we can see that these support levels and resistance levels come through and give us guidance on what the market will do. And the CTKS method version 2 is coming December 11, New York time. What is this CTKS method? It's a new standards-based process that reveals smart money buy and sell levels from any price chart. And you only have to learn it once to apply it for a lifetime to any price chart, to think and profit like smart money. It's applicable to global stocks, global market indices, metals, energy, industrials, currencies, bonds, crypto, and anything else that you want to mark up. In the last trading session, we saw the VIX, the fear gauge of the S&P 500, just retracing a little. This created a technical bounce in the major indices, and that's what we saw. And when we look at bond prices, they're continuing to go up, but all prices move in a wave. Please be aware of this. Bond yields are continuing to fall. The dollar is going down, and that's helping gold to go up. And oil is continuing to sell off. Risk-on sentiment is creeping back into the market. The DXY, the US dollar currency index, or the DXY, is really important to track. And what we've done here is to apply the CTKS method to it to derive these smart money buy and sell levels called Stanfield levels. And these levels go all the way back to the 2nd of January 1967. These are not formed by recent price action, which makes the CTKS method in its own class. The DXY is currently 104,797, and when we look at this particular pattern, it's starting to find a bit of a basis. It's actually hovering around between a sell level, smart money sell level at 105,357 and 105,663. And smart money buy levels at 104,392 and 104,113. You can see that the DXY is still under resistance. It's still in a downtrend, but it's getting to a point where it has to make a decision if it goes up or if it goes down. When people first get into financial markets, they basically say things must go in a particular direction. Professionals don't think that way at all. They think in terms of probability. What we can see is this lower support level is starting to get cracked. If this lower support is lost, we will be heading for the 104,392 level. It would be very reasonable and on the cards that the DXY could come up and challenge this 105,214 level, but still be under short-term resistance because it would be expelled by sellers, pushed down. But if it starts to get above this 105,357 level, we could see a potential trend change. Compounding this, we're still under a level of resistance as well. So the probability is that DXY should go down, but should and will are different. As professionals, we don't care about should or will or hope or anything like that. We just watch price action unfold and make our decisions based on support and resistance levels. And when we look at yields, especially the US government 2-year yield, is indicating some degree of positive upward momentum. This is a low, but this low is higher than that low. It means it's made a higher low. What does that mean? It means that the buyers are basically coming in and supporting price. We're getting potentially close to a trend change in the 2-year yield. If that actually happens, we would expect the dollar to be rallying alongside that and the markets to come down. We must look at the probabilities. The way that we tell the difference between a professional and a non-professional trader and investor. Non-professionals only go in one direction and they want absolute certainty. That's not the way financial markets work. There is no certainty inside financial markets, only probability. I created KS Zone Analysis to help people to understand what particular zone they could be in. The panic zone, the blame zone, and this is all about poor thinking, losing money. There is no certainty inside financial markets, and the sooner people give up that way of thinking, the faster they can become consistently profitable and enter zone 3, and the faster they can get rid of panic and blame and actually install happiness and courage instead and move into zone 4. Zone 4 is wealthy thinking. Zone 3 is rich thinking. There's a very big difference between the three. And Zone 3 and Zone 4 are all about probability, letting price unfold its story before your eyes. Zone 1 and Zone 2 are all about a story and having a preconditioned response to what will happen. Unfortunately, a lot of people are in Zone 1 and Zone 2, and these are the terror zones. We had a lot of brilliant comments about poor thinking, rich thinking, and wealthy thinking. Oscar said, poor thinking is guided by I need. It reacts to resources being perceived as being scarce. Rich thinking starts with I have, as the focus is on collecting and fearing to lose resources perceived as scarce. Wealthy thinking is we build, as the focus is on collaborative and creative action that circumvents resource scarcity. Very nice, Oscar. Rich thinking empowers your positive thinking and energy, says Sinman. Poor thinking blocks the positive energy required for life progress. Wealthy thinking harnesses the energy from past experiences and frees up energy for other aspects of your life. Thank you, my friend. And well done to Brett. Brett went hunting for inverters and found lit. It went up 40% from my entry point. Well done, my friend. And well done, Jay, for popping in your 3-dimensional risk management code. It's so incredibly important to do that regularly. Well done, Jay. And what is that code? It's fully explained in episode 685, but it has 3 parts. The first part is how you perceive the market will actually go, and you put a number, a percentage next to each one. You boil up the one that you think is most probable to the first part of the code. The next is if the market goes in this direction, what could happen to your portfolio? What could go down, go nowhere or neutral, or go up, given the market goes in that particular direction? And the last part is how synchronized in with the market do you feel? The market is always trying to desynchronize you. And one thing to keep in mind, if you are fearful of putting any particular trade or investment on, please don't put it on. Professionals do not have fear when they place their trades. What I would suggest is you just simply do Borsog trading. Borsog trading is a trading and investing market synchronization technique, starting with really small position sizes and then scaling when synchronization is reached and descaling after desynchronization has occurred. Borsog comes from rule 621, buy on red, sell on green. Just get into the market and trade with very, very small amounts of money, but make sure the fees don't kill you. I was mentioning yesterday, keep your eye on Apple. Apple is a critical stock to keep it in your analysis, and we can see so many levels of support below Apple's current price of $142.94. This is really important to understand. If there were not structural support levels, structural buy, smart money buy levels below, Apple could become vulnerable. But that's not the case, and Apple literally bounced just before that smart money buy level, which means there were more buyers there. It was not a weak buy money level, smart money buy level. It was a really strong one, and Apple is an absolute darling of the stock market. We can see so far a lot of support below Apple's price. Please keep your eye on Apple. Now that we've got an idea as to where the main market is going, we can look into the crypto market. Rule 45, your beloved alts cannot escape Bitcoin's gravity, and Bitcoin cannot escape the stock market's gravity. Total crypto market cap is $812.89 billion, and we can see that we got above this smart money sell level. We were below it. It was very precarious. But the thing to understand, crypto doesn't just depend on crypto. It depends on the stock market as well. What happened here was the positive news from the stock market. The stock market's reaction to people losing their jobs was so positive that it actually pushed up risk on assets such as crypto. And that's the way you want to look at crypto. Crypto is a very fast reacting risk on asset. The next level of resistance is 840.58 billion. But if we lose this 799 billion, the next level of major structural support is way down at 707.806 billion. We really don't want to lose that 799 level. Another favorable thing that happened, Bitcoin had a smart money buy level at 16,653 below it. The buyers were going to come in and defend this particular line, and we've seen Bitcoin come up with the stock market's gravity. You can see that just by overlaying the Nasdaq, how actually the stock market and crypto move together. A lot of people say they're going to decorrelate as markets. Unlikely. The bond market is a huge market, and that's not decorrelated from the stock market. All markets are interdependent and intercorrelated. Anytime you hear conversation, oh, it's decorrelated, please just bin it mentally. And why should you do that? Because these stories will wreck your portfolios. They'll make you look in a specific direction when it's just fantasy. Don't get sucked in by SBA, story-based analysis. This is the S&P 500. You can see it moving in alignment. And this is why we actually look at Bitcoin. Bitcoin can actually be predictive of potential movements in the stock market. It's money in the bank if you know how to read this. Or better yet, it's money in crypto. The two levels that we're watching out for right now, and Bitcoin is at 17,202. We're watching this smart money buy level at 16,653 and the smart money sell level at 17,426. We need to keep an eye on the longs and the shorts, and we can see the shorts are piling into the market. The shorts are basically saying, fantastic, the market's going to absolutely die. It's going to sink. This is what is happening here. And the longs are saying, yeah, I think you're right. I'm a little bit scared about getting into the market right now. So we can see that a lot of shorts have been liquidated. In fact, there was a short squeeze not too long ago, but the longs are starting to get hit now. Total liquidations were 40.01 million in the past 24 hours across 15,180 positions. That's just like no positions whatsoever. That's worse than a weekend. So there's not a lot of participation in the market right now. And when we look over the past 24 hours, total liquidations, about 75% short. What about the past 12 hours? About 82% short. What about the past 4 hours? About 92% short. What about the past hour? Ooh, 81% long. Just exactly what we were talking about. You can see it in the chart. And what are we looking at here? A potential breakout. Very interesting. It's a little bit of a cautious time because there's actually an overcoming of resistance here, but it's not really that conclusive. Just keep your eye on things. We just trade the probability anyway. The greatest gainers over the past 24 hours, TWT out in front, followed by BSV coming up behind Lunacy. It's lunatic. Following that, Rune, and then Bit, Neo, and Carver. And the greatest losers in the top 100, Axie Infinity, Synthetics, Flow, Ton, and ooh, we got a couple of stable coins in here. When I say Rule 45, no alt can escape Bitcoin's gravity, and this is from the Masterclass. A lot of people say, Ken, my alt's got nothing to do with Bitcoin. Are you crazy? I always like to get the statistics to do the talking for us. When we look at Ethereum, you can see Bitcoin's price action in blue. Ethereum is the actual chart. When Bitcoin came down, what happened to Ethereum? It literally came down with it. When it went up, when Bitcoin went up, what did Ethereum do? It came up with it. You're going to see this time and time again. What about Binance Coin? It's just moving in alignment with Bitcoin's gravity. What about XRP? XRP actually showed strength and predicted Bitcoin's movement. Keep your eye on XRP. Hopefully XRP has some really good news about its case. What about Doge? Doge is moving in alignment, but not so much. At the moment, we haven't seen this big spike up like we saw. Look at this peak. Look at this peak on ETH. Look at the peak on BNB. What about the peak on Doge? Well, it's under that peak, isn't it? We could see some relative price action come through Doge. And this is another reason why you want to look at Bitcoin's gravity. You're trying to understand the different patterns. This is what recognizing patterns and pattern recognition is all about. What about ADA? It's coming up, but not as strongly as Bitcoin's gravity. Look at Matic. Matic is absolutely on fire. Matic is very, very strong. It's exceeded that peak. That peak. It's like up here if it was Doge. So just bear this in mind. You want to follow strength. What about DOT? DOT is moving in alignment, but it hasn't exceeded this peak. This is how you want to read relative gravitational bias. And what about Litecoin? Litecoin is starting to get there, but it's a little slow in the takeoff. Let's see how it goes. Turning towards the next 8, we can see SHIB, just kind of like Doge, just below the gravitational pull. It hasn't been pulled up yet, but don't forget, gravity is gravity. Look at Solana. Solana has been very weak with the FTX issues that it struck, but it's still really, really well performing. So it's one to keep your eye on. Tron, we can see Tron absolutely bolting out the gate with Bitcoin's gravity. Tron and Bitcoin hanging out together. And we can see Uni just following Bitcoin's gravity as well, but just a little bit weaker. We can see AVAX quite weak, Atom quite weak, Link very weak, and XLM also weak. And many thanks to Tiana for her very kind comment about the masterclass. Tiana says, every lesson inside the masterclass allows for an immediate application for the knowledge you learn. Every video is packed with essential information, practical application, and supported by high-level scientific approach. Ken himself is very approachable, friendly, and dedicated to improving the lives of his students in any way he is able to. I am. Thank you, Tiana. That's very sweet. I have also found the graduates of this program to be equally as professional, kind, and helpful. Oh, they are. We have one of the best communities on YouTube. Tiana says, this has and continues to be an incredibly fulfilling experience, which has given me monetary confidence, purpose, and joy. Charting has even become my new form of meditation. Thank you, Tiana, for sharing your experiences. Very kind of you, my friend. And I'd like to thank all the very, very kind and generous community members who reached out and bought me a coffee at buymeacoffee.com/CryptoTradingKS. Thanks so much, everyone. And many thanks to Joe. My nephew shared your videos with me, and I can't wait to take the class. Fantastic, Joe. And thank you to Bluebird Cafe for your very beautiful words that you just wrote to me personally. I always only show the public view. And thank you to Vicente. Thank you very much, Ken, for your daily effort and dedication. Every day I watch your video, which has an influence on my knowledge. Thank you, my friend. Very kind. And from Bruno, very generous of you, Bruno. One big bouquet of flowers for Kate, a double espresso, lavassa please, for you, Ken, and the rest for you, for the good soul standing in front of you in the next queue. Oh, Bruno, you're awesome. And again, well done everybody to pop in your Borsog codes. This is really fantastic. And this is all part of the active learning. We know that we control the trade or investment, but the market controls the return. The more that you can learn about the market and the synchronization you have with it, the better off you will be. Undeniably so. And Kevin, great to hear from you. Art has said some incredible things about rich thinking, poor thinking, and wealthy thinking. Thank you, Art. And what Art says, poor thinking is all about panic and crisis. People with poor thinking don't want charity and create bad decisions. They're into gambling and betting on anything, trying to buy the lowest and sell the highest, expecting things to come to us without working for it. Because of constant panic, people that have poor thinking. And rich people can have poor thinking as well. It's not about money, it's about a thought process. They don't have time to actually work at gaining anything. Very, very wise words, Art. Art says about rich thinking is when we think we have made it and we want to show it off. We can now afford the Rolex, the Mercedes, or better, the nice home in the nice neighborhood. We are good enough that we're able to afford some luxuries that previously we never thought we could. That's a key line. We think we are invincible, but we don't have the right mindset to maintain these newfound riches. Instead of being thrifty, we spend what we make. We get complacent. This mindset will bring us right back into poor thinking. It's really good, Art. And I watched a YouTube ad the other day, and this particular person got on and said, well, it went a little bit like this. You can make $1,000 a day every single day for the rest of your life, and it only takes 5 minutes. Oh my goodness, what a lot of rubbish. And the famous words, you don't have to do anything. It is guaranteed and at no loss. Please, this is a fantasy. And if you come across anybody saying things like that, run very fast. That is not the way the world works. Art says some really, really profound and wise things here. With wealthy thinking, people with wealthy thinking, money is not the value of their worth. But with poor thinking, money is the value of a person. But it's not. It's absolutely not. And rich thinking, people think money is their value. But it's not. Wealthy thinking really is the definition of positive excellence. Money isn't the main focus. You can be in poverty and still have wealthy thinking. And a lot of people in poverty do have wealthy thinking. And if they give themselves the right opportunities, or the right opportunities present themselves, because we always need to be more resourceful than what is actually going on with our lives. We never let a problem beat us. They can gain that money. Truly wealthy people don't flaunt their monetary wealth. And this is really important to understand. Some of the richest people are some of the quietest as well. So what do people with wealthy thinking do? They look for ways to better the lives of the people that they care about. Their worth is valued in their positive attitude, their giving, their productive mindset. Money is not the value of their worth. Wealthy thinking starts with valuing the really important things over money. With poor thinking, we only focus on ourselves. Wealthy thinking, we focus mostly on helping others. But when people are in scarcity, the thought of helping others is just an alien concept. After all, they're in scarcity. They're literally in survival mode. And thank you also, Art, for your very nice comments, my friend. Positive excellence is all about putting the things that truly matter forward. Money is a thing that matters, absolutely, but it comes as the result of doing the right processes. Having inner and outer peace is incredibly important. If you don't have this, you will burn time, effort, and energy getting diverted from your path. You can't become wealthy in so many different ways, money being one of them, if you're always in conflict with other people. And a lot of people don't realize this, and they wonder, why aren't I further progressed in life? It's because you spend all your time in conflict. Kindness is also incredibly important. Courage, honor, humility, respect, forgiveness, strength, boundaries, integrity, decency. Gratitude is particularly important. Gratitude makes people happy. Happiness doesn't make people happy. Gratitude makes people happy. Sometimes when people think, oh, I'll just go and buy the latest car or the latest thing or that really good-looking handbag or very good-looking whatever it is, they think they'll be happy. And for a time they are. But it fleets. It's very fleeting. And this is what rich thinking is all about. People just amass all these things that give them a little bit of gratification, a little bit of happiness, but it doesn't last. The next time you look at this KS zone analysis, you can see zone 1 and zone 2 is in poor thinking mode. And I think we should talk about these three methods of thinking a little bit more because they're so powerful and it helps so many people to know what they don't know because this stuff is hidden from us. It's taken me decades and decades and a lot of people inside the community, many decades to unravel this big ball of wool. Let's keep on talking about poor thinking, rich thinking, and wealthy thinking. Zone 1 and Zone 2 is poor thinking. Nothing but barbed wire and broken glass exists in Zone 1 and Zone 2. Zone 3, you have nice things around you, definitely, and you can make money, but there's a lack of something. And that's the lack of something is the internal wealth that comes in Zone 4. And you know that people can go directly to Zone 4 right away. There's nothing stopping anybody just jumping the queue. What is the difference between Zone 3 and Zone 4 when it comes to something like, I don't know, buying a Tesla if you wanted to buy a Tesla, if you want to sit on top of a battery pack? And that could be a good thing. I'm not sure, but I'm not doing it. The concept is, in Zone 3, you want the Tesla. In Zone 4, you buy the Tesla stock. You don't buy a Tesla. You are a part owner in Tesla. Big difference. If you have something to share about poor thinking, rich thinking, and wealthy thinking, please do so in the comments. It's a wonderful thing to help and share with other people. The differences between the three. It's very important to know, and it's hidden from a lot of people. And one shortcut into wealthy thinking is through the CTKS Creed. The CTKS Creed is a series of positive affirmation statements you say to yourself. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy, I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. And I never let a problem beat me. This series of positive affirmation statements is powerful enough to get you into Zone 3. And of course, Zone 4. Stay safe out there, my friends. Take care and see you tomorrow. Bye for now.